Welcome to CTAS 2026 Minnesota Paid Leave video. My name is Mark Albrado. I'm with the Government Information Division of the Office of the State Auditor, and I will be today's video presenter. Today, we will look at CTAS 2026 Minnesota Paid Leave and a known issue that was corrected. CTAS 2026 and Minnesota Paid Leave. The addition of Minnesota Paid Leave has been added to CTAS. The ability to select a normal or small employer, enter percentage split of premium between employee and employer, calculate premium withholding for employee and employer, calculate taxes for employee fringe benefits if employer pays over 50% of the premium, withholding fringe benefits displayed on payroll register, paycheck, and pay stub reports. Future reports to be released before first quarter of 2026. PFML account distribution report and a PFML quarterly report similar to the 941 report. Now let's take a look at how to set up paid leave in the CTAS program. Open your CTAS program. With CTAS open, select the Admin tab, and then the Admin icon, and then the Edit System Information tab. You will see a new section, PFML, Qualified Entity Employer. Use the drop-down to select the employer type. In this instance, we will select Normal. Once you have your type selected, select Save. You can now go to the Payroll tab on top, Employee icon. This is where we will set up our individual employees with paid family medical leave. Double left click on an employee. This will open up the employee record in its own tab. Find the Leave and Benefits tab, F7. Left click on that tab. You will now see a new section for paid family medical leave. To enable an employee, check the Enable Paid Family Medical Leave box. This now allows you to set the percentage the employer will be paying. With the employer percentage set, CTAS automatically calculates the employee percentage, as the percentage has to total 100%. If the employer percentage entered was 60, the default for the employee would then be 40%. The default is going to be 50-50, as the employer must always pay 50%. In this example, we will use 50-50 for the employee split, and we will also set up another employee that shows a 100% employer percentage. Once you enter the correct percentage, select Save. This employee has been successfully updated. We will close the Individual Employee tab, which brings us back to our Employee List tab. We will now open up our second employee record. Go to the Leave tab again. Enable the Paid Family Medical Leave. And in this instance, we are going to have the employer pay 100% of the premium. I am using different percentages for the employer for two employees, so when a payroll is created, you can see how CTAS would calculate the different percentages. With this employee saved, we can close the Employee tab and we can create a payroll. I will just add the two employees that we are using in this example. We'll go ahead and enter the hours for these employees. I'm going to use $1,000 just so it is an easy number when calculating the tax for demonstration. The employee's hours entered, the gross pay is $1,000. The paid family medical leave premium will be calculated off $1,000 of gross pay. If we look at the employee deduction, we now have a section for paid family medical leave. You will notice that the amount being withheld is $4.40 for the employee. If we go to the employer share tab, we also have a new section, PFML premiums. Notice here that the employer required amount is also $440, which is the 50% required for the employer. We will now add the hours for the second employee. We will use $1,000 so we have the same gross pay amount, so we can see the difference in the calculations. With this employee having the same gross pay as employee 1, let's look at the difference in the tax calculated for paid family medical leave. Remember, employee 2 has 100% paid premium by the employer. If we look at the employee deduction now, notice that 0 is being withheld from the employee's paycheck. If we go to the employer's share, notice that $440 is the 50% required, and the employer is also paying an additional $440, which is the employee's half. The additional amount, $440, is considered an employee fringe benefit and will have taxes withheld from it. To see this, we will run the payroll register and look at the different tax withholdings. We will now view the payroll register and look at some new items and the difference in taxes. First, we'll look at the top. You're going to see a new heading, taxable non-wages, with a new column that says employer contribution paid family medical leave. Notice employee 1 has 0, employee 2 has $440. Employee 2 is where the employer is paying a 100% premium. Remember that if an employer pays some of the employee's premium, this amount will become taxable. Let's take a look at the withholding taxes. Federal withholding taxes. Notice that employee 1 has 1927, employee 2 has 1971. The difference that employee 2 has more withholding is that there is now being tax withheld from the additional $4.40. You will also notice this in FICA and Medicare. There's a slight increase in what's being withheld for employee 2 due to the fact that the employer is paying some of the paid leave premium for the employee. Also notice the last column in section 2. There's a new PFML column. This is the portion that is being withheld from the employee's paycheck. Employee 1, the employer is paying 50%, which means the employee must pay the other 50%, which is the $440. If you look at employee number 2, notice that he is paying 0% because the employer is paying 100% of the premium. These items will also be shown on the pay stub and paycheck. Let's take a look at those reports now. We will view the paycheck report. Notice in the middle section of the paycheck, there have been some new line items added. One will be an asterisk designates taxable employer contributions. Also notice that the additional PFML has an asterisk, and this amount is taxable to the employee. You will also notice a paid family medical leave under the employee after-tax deduction, and 2 items under the employer contributions, which will be paid family medical leave required, and then a paid family medical leave additional item. Remember in our example, employee number 1 was at a 50-50 split. In this instance, the employee will have $440 withheld from their paycheck, and the employer will contribute $4.40 toward the premium. When looking at employee 2's record, we will notice that the employee is having zero withheld from their paycheck because the employer is paying 100% of the premium. Under the employer contribution, the paid family medical leave required is $440, and plus the employer picking up 100% is paying the 50% for the employee, which would be an additional $440 from the employer. Under the employer contributions, notice that the paid family medical leave required is $440 and the paid family medical leave additional is $440, as in this instance, again, the employer is paying 100% of the premium. Now, let's take a look at how the premiums will be affected between a normal employer and a small employer. First, let's visit the Minnesota Paid Leave website. Notice if you look at the premium rate for 2026, it states the paid leave rate is 0.88%. The premium rate is a percentage of an employee's wage. Premiums will be collected by the state from employers. The premiums are split between employees and their employers. Small employers pay less. This means that the small employers receive the discount when calculating the tax. If we scroll to the bottom of this page and how this calculation works, if you look, small employers pay a reduced premium rate under the paid leave law. This calculator finds the average employee's wage and compares it to the criteria for the small employer rate. The number of employees must be 30 or fewer, and the average employee wage must be less than 150% of the statewide average annual wage. If an employer qualifies, the reduced premium rate is applied. The maximum contribution from employees in this case is the same as an employee of a large employer. So the employee portion of the paid family medical leave premium is the same whether you are a large or small employer. Let's look at this in CTAS. To switch from a normal to a small employer, select the Admin tab on top and then the Admin icon. Go to the Edit System Information tab. Find the PFML Qualified Entity Employer. Select the drop-down, change to small, and select Save. Select OK once it was updated successfully. In CTAS, we have the same two employees, Employee 1 and Employee 2. Employee 1, if you remember, was 50-50 split. Employee 2 was 100% employer paid for the paid leave premium. Again, each employee is receiving the $1,000 for gross pay. If we look at Employee 1 now, because this is a 50-50 split, the employee is still paying $440. If we look at the employer share, they are now paying $220 because the employer receives the discount in the percentage, not the employee. If we go to employee number 2 and we look at the employee deduction, again, nothing is being withheld because the employer is paying 100%, so no deduction for this employee. But when we look at the employer share, the required amount is now the $220 because they are getting a reduction off the required amount. And the additional amount that the employer is paying for the employee, again, is the $4.40. Same as when they were in a normal employer size. Let's go ahead and take a look at how this looks in the payroll register. Again, we will go to the non-taxable wages. Same outcome as with the normal employer. The first employee is a 50-50 split, so the employer is not contributing anything for the employee. Down here again for employee number 2, the employer is paying 100%, so they are paying the extra half of the premium for the employee, so that brings in to $4.40. Notice that the taxable wages were the same as before. If we look at the extra $4.40 that the employer is paying, again, the federal taxes are a little larger being withheld compared to employee 1, and the same with Social Security and Medicare. Also notice for John Doe 1, employee 1, under the PFML withholding, the amount is $4.40, exactly the same as the amount as if the employer was a normal size employer. When viewing the paycheck, we will see the same situation, except we will notice that the employer contribution is receiving the lower percentage when they're paying in. So again, if we look under the employee after-tax deduction, John Doe 1 or employee 1 was the 50-50 split. The paid family medical leave being withheld is 50%, the $4.40. And then if you look under the employer contribution, this is where the employer receives the discounted rate and they are only paying $2.20. If we go to employee number 2, this is where the employer is paying the full 100%. Again, notice under the employee deduction, nothing is being withheld for paid family medical leave, but under the employer contributions, the required amount is $2.20, and then the employer is paying the remaining 50% for the employee, so that amount is $4.40. If you would like further explanation about the small employer percentage splits, we have a document located on our website. Go to the Office of the State Auditor's main CTAS page. Under the What's New heading, CTAS 2026, please view the Minnesota paid leave small employer calculations and 50-50 splits. Known issue corrected. Pair exclusion report not pulling data. With the release of CTAS 2025 Update 3, the pair exclusion report was not pulling any data. Even though employees were marked as exclude from PARA, when the exclusion report was created, no employees were showing on the report. This has been corrected in CTAS 2026. Thank you for viewing the CTAS 2026 Minnesota Paid Leave presentation. If you need additional resources, please see the CTAS main webpage. And if you need any CTAS help, feel free to contact the CTAS email, ctas@osa.state.mn.us, or the CTAS helpline at 651-296-6262. Thank you and have a good day.